It is November 19th, 2025, and it is 2:34 a.m. So it's the overnight market, and it's been a while since I posted another video. Once again, I am late. I apologize for that. But what can I say? I mean, it seems like a lot of the engagement has been dying off. Not just with me, but across the board, most likely because the market is down, and that's usually what happens. So my comments have been down, whatever. It is what it is, and I am down, I want to say 60K from my all-time highs, because my all-time highs was 305, so now I'm at 245, which is about a 20% drop. So you could say that my account is kind of in a bear market right now. But for this past week, I am down almost 12%. The past month, same thing, almost 12%. Past 3 months, barely in the green, 1.58%. Year to date, still almost 100%. It's 98.38% right now. Year over year, only 110 now. I mean, not too long ago, it was 160-ish, slightly above 160. And unfortunately, my all-time chart is not at 400% anymore. But it's okay. I mean, this is kind of what I asked for. And I did make a decent chunk of change on my Robinhood covered calls. I want to say after all my covered call premiums, my average cost per share for each Robinhood share that I have in my Robinhood account is around $7. So I've lowered my cost basis down from $10 a share all the way down to $7 using covered calls. And I officially no longer have any Robinhood covered calls anymore. I took profit a little bit too soon, just a little bit, because if I would have waited one more day, I could have milked out, maybe $300 extra, whatnot. But it is what it is. A win is a win. I made a decent amount of money in a short time, and we'll get to how much I made so far this month in a second. But I did also need to update my transactions. So I believe we last left off on that CMG buy. I did, of course, close out this Robinhood covered call. That was a decent amount of money. I should have waited a little bit longer because it did go down even more, like I said. But this one, I did make over $270 in it. And then this one, I made over $870. So that was a good one. These two, I made over $550. So a decent amount of money. And then, of course, I paid my Robinhood margin, which is slightly lower than it usually has been. It's been hovering around the 300 lately, but now it's at 275. I did sell a PayPal cash secured put for $200, and then I did go ahead and buy one more share. It doesn't really make a difference in my account or my average cost, but I just wanted to use that premium to buy an extra share, so it was quote unquote free, I guess you could say. And of course, if we take a look at my option positions so far, I do have a Target cash secured put that is slightly above $70. Target does report earnings this morning. So it's 2:38 a.m. right now. Target does report in a bit. And when it comes to this cash secured put, I mean, I collected over $300 in it, and it's at a very low strike price, right? And it's going to be, as long as they keep paying their dividends, it's going to be above a 5% dividend yield. So it will basically pay for itself in terms of interest and dividends. Like my dividend payment will pay for the interest. Now, of course, that's assuming that they keep their dividends. And if they do go down, the numbers aren't as bad as the market thinks. But if I had to guess, I think Target, will be just fine. And my PayPal cash secured put is already in the red slightly, but it is what it is. Now, if we take a look at some of the stocks that I have, nothing much has changed. Not really, a little bit more PayPal, a little bit more MAA. If we take a look at equity, my Robinhood is no longer above 200K. If we take a look at, let's just see, price. So Robinhood is at 113.50, all the way down from its high of above like 150. And I guess I just wanted to kind of give my overall thought process as to why I decided to close out my covered calls instead of just holding until expiration and whatnot. But right now we are at, or almost at, a major support zone for Robinhood. So as you can see, there is a gap here around let's see, 107, 109 ish, right? There's this very small gap right here that most likely will get filled, but as you all know, anybody that has been in the markets for a while, you will know this saying, not all gaps get filled. And usually it's like one of the biggest traps that traders fall into. They think a gap will get filled, and most of the time they do, it seems like. But sometimes it doesn't, and a stock just completely reverses and makes new all-time highs. But this is the weekly chart, so it is a higher time frame chart of Robinhood. I mean, we're down all the way from what, 154 almost. And as you can see, we have this old high here, lots of support right here, even more support at 105. If we take a look at the daily chart, I mean, yeah, we still have that gap right here at around 106. And of course, we have the 200 moving average around $85, $90. So definitely could go down even more. It's just, I only had a couple $100 left on my covered call positions. As you guys saw, I was closing them out for like $80, $100. One of them was like $200, and that was probably my most expensive one. So the juice just isn't really worth the squeeze. I could have squeezed out that $100 here and there, that $200 one, right? But let's be honest, if Robinhood does drop all the way to $90, I mean, is that $200 going to save me? No. I would much rather just close it out, and just in case Robinhood reverses from here, I don't cap out any upside, right? So that's just kind of my thought process and my logic behind it. But definitely keep in mind the 200 daily moving average is around 88, 87, 86, right? So we could definitely revisit that, but I decided to just, close out those covered calls in case we get some upside here. And I mean, if we take a look at QQQ, there is this gap down here all the way at 490-ish, around there, right? 496. But like I said, not all gaps get filled, and that's not to say that it won't get filled sometime in the future, right? Especially if we have a really bad bear market, we could definitely revisit and fill that gap. But if you were shorting the market here thinking that it's going to fill the gap, I mean, you missed out on all this upside. But right now we are, I want to say this is the 21 weekly moving average, but there's some support here. If we go down to the dailies, of course, even more support right here in the 592 area, right? 590, 589. So lots of support here. And obviously that doesn't mean it's going to immediately start going back up. I'm just saying it's probably not the best time to start shorting. I was already hedging a little bit going into this drop. And of course, as you guys saw, I made a decent amount of money on my Robinhood covered calls. And we'll get to that in just a second. But yeah, I don't really think it's the best time to start selling even more covered calls here, or even buying puts, right? Because put values have been going up with all of this fear in the market. And for any of you guys that have not yet already done so, this is my X, just in case you wanted to follow me to see what kind of stuff I post. I don't post a whole lot, so you don't have to worry about spamming when it comes to me. But I did post this one like 15 minutes ago, almost 3K this month, mostly from Hood Premiums. And as you guys can see, October, I did basically half what I did in November, and November's not even done yet, right? Like I said, if Target reports good numbers and my cash secure put expires worthless, that's like an extra $300 there. So definitely still a lot more money to be made. But as you guys can also see, I did have a drop in an interest payment. So that top line is like option premiums and trading. That middle line is dividends, and that last line, the red one, is interest expense. So my interest did go down, mostly because I started paying back a little bit. I did pull a little bit more just to sell some cash secured puts, of course, but I did pay off a little bit of margin, and also rates went down. So I did save a little bit of money on that. And I did post this about 2 hours ago. I did my part, and this is in reference to PayPal and Nike. So for anybody that doesn't know, PayPal is doing a promotion right now where you get 20% cash back if you do the pay in 4. This was the post that they had, and I just went ahead and tested it out to see if I actually get 20%. So the points are pending right now, so I can't confirm exactly how much I'm getting, but I did go ahead and buy this really cool jacket on Nike. So I'm doing my part, guys, right? I know PayPal and Nike have been dead money for a long time now, but I'm doing my part. I'm doing my best, guys. But I did have these posts about like 3 days ago. I'm surprised to see education is holding up when it comes to job cuts, because as you guys all know, AI is replacing a lot of educational jobs, right? And a lot of websites like Chegg, I want to say, they've been affected heavily by AI because, now you can just basically AI all of your homework questions. And I have this chart right here where it says monthly job cuts 2024 versus 2025. And as you guys can see, it seems like we're having a lot more job cuts this year than we did prior years. So who knows, right? Just like the Sam Bennett chart says, 2026, we could see a little topping period. And then I thought this was a funny retweet here. SoFi is up 26% since Hood showed how to short SoFi in their demonstration. Hood is only up 13% since then. I didn't verify that stat, but I thought it was kind of funny. Usually whenever Robinhood rolls something out, it's a little bit later than other brokerages. Like some stuff they're very early to, right? Like their gold card and all of its features, it's a very unique card. But in other areas, they have been lagging, and one of the areas is short selling. And usually whenever retail has access to a certain, I guess you could say, trading instrument, that usually marks like the top or bottom, which is why, or it's one of the reasons why retail has like that stereotype of being dumb money. But another interesting thing that I saw this week was Visa, MasterCard could possibly let retailers reject certain credit cards, right? And I didn't hear a lot of people talk about this. I know Bloomberg mentioned it, which is how I found out about it, but I didn't see a lot of talk of this anywhere else. Maybe I just wasn't paying attention, but I think this is very important, because if this becomes, let's say, a very common, right, where retailers are just rejecting cards left and right because they don't want to deal with the excessive fees with more premium cards like Robinhood or American Express and whatnot, that can influence people's behaviors. For example, if retailers start rejecting the Robinhood Gold card, is it actually worth having it and using it? Right? It's a very valid question to ask, right? And it's not like these retailers are going to have a sign up that says we don't accept this card here, because that would just be bad for business. But if it gets to a point where it's just so inconvenient to carry around a Robinhood Gold card, it becomes a liability. Well, then we could start seeing people canceling it, right? We could see people not really thinking that Robinhood Gold, the membership, is actually valuable. Like the value proposition of Robinhood Gold will go down, and that results in a weaker ecosystem, right? There's nothing keeping people tied to your ecosystem because using your credit card is just very annoying. And American Express has already somewhat dealt with this, which is why I think they're a very good stock to hold, because even though their fees are excessive, businesses just don't want to miss out on the customer base of American Express. But I don't think Robinhood is at that level yet, right? I don't think businesses are going to be like, yeah, we just can't miss out on the retail trading community's credit cards, right? I don't think they're that worried about it. But if this actually plays out and we start seeing a whole bunch of credit cards like the Chase 5% cashback card gets declined at a lot of retailers, right? Or the Discover 5% card get declined, the Robinhood 3% card, maybe even some retailers rejecting the SoFi credit card, right? Maybe that will have a negative effect on Visa and MasterCard, maybe, but not so much. I think that has a much more direct impact on the banks that actually issue these cards, right? Like Robinhood, that would have the Robinhood Gold card uses Visa, but I think it would hurt Robinhood more than it hurts Visa if that card starts getting declined in places. But one of the companies that this could possibly benefit is possibly PayPal and Capital One. So Capital One is in an interesting position, and I think they actually saw this coming, which is one of the reasons why they bought out Discover. So Discover was that card network and Capital One was the bank. If they didn't buy out Discover, well, then that gives Discover a little bit more leverage to pick and choose which cards get declined at retailers, right? But now that Capital One took over Discover, they have that top to bottom control over that, right? So I think that's a very interesting stock to look at and I definitely have it on my watch list. Like I said, American Express, they've already been through this. More and more retailers are, more and more merchants are accepting American Express because they just can't afford to miss out on that customer base. And like I said, American Express already knows what this feels like, right? To have merchants reject your card because it's American Express. They've already been through this, so I think they'll have an easier time maneuvering around this. And Visa, MasterCard, they're just so big, I don't think it would affect them that much. But if it starts becoming annoying for credit card users to have different various cards, like right now, I know a lot of people that have the Chase 5% card, the Discover 5% card, the Robinhood Gold card, etc., for their different categories and their different bonuses, right? The different rewards. But if those higher end cards just all get banned because the rewards are just too high and they're too expensive, then I actually think companies like PayPal will benefit because they have that direct connection with the merchant. People can just use their PayPal balance to pay for things, and then they get rewards in the app, right? Just like recently they did the 20% cashback bonus. I think if people's credit cards get declined, they'll turn to things like that, right? A pay in 4 with a 5% cashback. So who knows? It's just things to think about. But for sure, I think if PayPal can capitalize, if this situation happens where we see a whole bunch of credit cards get declined by retailers, I think PayPal should take advantage of that situation and really start to take market share. But who knows? This could all just be a nothing burger. But when it comes to your guys' comments on my previous video, I didn't get too many, but we have Luke that says Epstein Files released 2, so it was up and down. Now it's a recovery on the S&P QQQ futures. Now this was 5 days ago. I think at the end of the week, it's up because of FOMO off of NVIDIA earnings next week. Next week might go up from people having money to buy stocks. Plus, if NVIDIA earnings are very nice. So far it's been down, it feels like. As for the beginning part of your comment, I don't think that really matters, to be honest. And like I said, this isn't really a political channel, but when it comes to things like that, like the Epstein Files and whatnot, I don't think we as the public will ever truly know what the entire situation is in regards to that. We'll never have all the information, right? So I'm not saying it's not important, but I just think there's other things that, that are more important to me personally that I could shift my focus to, right? Like just focusing on my money and my stocks, my investments. Because when it comes to the files, like I'm just not an insider when it comes to that. I don't have firsthand knowledge. I'm not very educated on that. So, I just don't really worry about it. And I don't think it affects me, right? Like I'm not in those files, right? And even if I did have all the knowledge, right? If all of those files became public, how would that affect my life? It wouldn't really, to be honest. So I think a lot of that is just a lot of political theater, but not financial advice with a joke. Why is my name in your description? Okay. We have Carl77 that says, are you planning to sell? Planning on selling any Robinhood share, or are you holding? It seems like your portfolio is overbalanced in that direction. And I guess the beginning of my video kind of answered your question. I sold a lot of covered calls and made a decent chunk of change off of that. I obviously didn't hedge my portfolio a lot because, I'm down 20%. So if I hedged more aggressively, maybe it could have helped me out a little bit. But, I made a decent amount of money on covered calls. I don't really want to sell my Robinhood because I think they still have a bright future. But I think the next 2 years could possibly be bumpy, which is why I've been dabbling into covered calls instead of straight up selling shares.